Good morning, guys, and welcome back with a new video. Today we're again discussing Bitcoin, what it has done yesterday, and what we can see and observe happening in the overall trend, the fundamentals, and how market participants are choosing their sides. You can clearly see that in derivatives, which we'll go on later. I hope you enjoy. If you do, please smash that like, subscribe, and without further ado, let's get back into it. So when we look at the higher time frame here, you can clearly see bearish order flow is getting really nicely respected, which is a shame because yeah, I think most of us, including me, would like to get Bitcoin to rip really hard against that all-time high, taking out these and these highs, and then eventually target this, where we can like look for longs into this, and eventually into that. And to confirm, here you see here the beautiful imbalances. Here you see the break, and you can also see like these imbalances that are getting taken out here. We want to see that on this side, so this imbalance is the first imbalance that we want to be taken out, and preferably in the process a new imbalance could be created, which acts like a sort of support. So at this moment you can clearly see that price is respecting things on the daily. It gets lower, it goes lower, but if you can like see what is happening here, if you look at like the expansion, retracement, reversal pattern that is ever imminent in the markets, you can here see that this big drop is really fueled, and then this upside, this retracement here is very minimum. If you can see that it's only, well, I would say 0.382 around that level percent of the move, whereafter it just rips again. And now when you look at this move, it's around like 60%. So that means that price is needing to search for liquidity higher in this leg to continue down, and you can clearly see the continuation down. But if you look at this, where it breaks like this and this, not that one, and with this you can clearly see that it breaks this and it breaks this. For this move, it really doesn't break anything. It just sweeps it here for now. Could prices move down? Unlikely, but possible, of course. It can always be possible. But you can clearly see that like exhaustion is happening here, or the pairing where like market participants really don't want to go any further without any fundamental value, and this 60,000 level really acts as a support, where price could trade off. So we could see the bottom here. Of course we need some confirmations, which will start to happen on the 4 hour, because if you do top-down analysis, the 4 hour first gives the signal to potentially move up further. So at this moment this imbalance is the first invalidation point, then comes this and this, and from here on, this level, I could say like, okay, maybe we're gonna tap this most probably, and then after this here, this is the structure of price that we want to observe and see if like there's any intention to go up. So if it's like above this level, it's like only transacting, then it most probably will go down. But if it like shifts up, creates imbalances, breaks other imbalances, then we could say, hey, the bullish side is confirmed again, and we can really look at those levels I saw and we saw and analyzed earlier. When we look at the news of the day, he said, it's not that much. Ether is really dropping, which is not great for the crypto market overall, but for people that are only in Bitcoin, it's not that bad. But yeah, we are just in a bear market, and that's okay. That's just the name of the game, and we have to keep pushing, keep learning, keep accumulating, and then the price will eventually turn around. And when it turns around, we will all bank some dollars. Here like a DeFi project, but nothing much to note down. But when you look at the option data, you can clearly see that the volume and the contracts are still really consistent. Nothing out of the ordinary. Nothing big spikes or something. The put call ratio has been down a bit from 124 to like 180 to 1.8, which means that either calls are being bought or puts are being sold. And when you can see here, it like everything here from 40k to 72k is like peanuts when you compare that like to 86 to 170. Big volume, lot of volume is being put on the table here, and that's also where all this contracts come from, because here you can see the puts that are being bought. It's significantly more than the calls being bought. So this 21% is mostly coming from this. Now you look at the open interest data, it just goes down a lot. People are executing, which is great, because it validates the analysis we did a couple of days ago, where we looked at the volume of the puts, and we saw that 60,000 was a major level, and price is until now respecting it, but you never know what's going to happen next. Volatility, okay volatility, but when we look at the ETF in and outflow, we can clearly see a very bad day in terms of ETF outflow on really all platforms here. A total of like minus 691 million being pulled out of the crypto market is really bad for the crypto market. It's good for volatility and maybe better for like retail traders, but bad overall for the market, as it needs to mature. It needs to mature for it to really be the market that is stable, can produce like significant results, and isn't as volatile as it is now. Some people like it, some people hate it. I think there's like both sides to the coin, but price really has to be a lot stabler before like more volume is flowing in, and it's like a chain reaction. So more volume institutionals is flowing in. The price gets stabler, and then more is coming in. So keep that in mind. At this moment, the institutions are really flowing out, but yeah, it's okay. We will keep on pushing, and it will be better. Okay, thank you for watching, and see you tomorrow.